Welcome to episode 9 of AltFinance, the funding frontier. I'm your host, Jason Feimster, the founder and CEO of Moonshine Capital. Today, we're delving into a topic that's close to my heart and crucial for many budding entrepreneurs. Small scale, big impact, microloans for emerging businesses. This episode is an exploration of how tiny loans can make massive differences in the lives of small business owners and the broader economy. We'll uncover the essence of microloans, their impact, and the stories of those they've helped ascend from modest beginnings to great successes. So whether you're an aspiring entrepreneur, a business enthusiast, or simply curious about the alternative financing, this episode is tailor-made for you. Let's dive in. Microloans. The term itself might conjure images of small sums of money exchanging hands, but the reality and the impact of these loans are anything but small. Let's start by understanding what microloans are. Traditionally, a microloan is a small loan, often less than $50,000, and in many cases much smaller, given to individuals or small businesses, typically in developing countries or underprivileged communities. The idea isn't just about lending money. It's about empowering those who don't have access to traditional banking services. The concept of microloans isn't new. It traces back to the 1970s when Muhammad Yunus, an economics professor in Bangladesh, began a project that led to the creation of the Grameen Bank. Yunus and the Grameen Bank were jointly awarded the Nobel Peace Prize in 2006 for their efforts to create economic and social development. This recognition wasn't just for the financial aspect, but for the profound social impact these loans have on communities. Unlike traditional loans, microloans are not primarily focused on profit. Instead, they are a tool for social change. They are designed to be accessible. Traditional banks often overlook small scale borrowers due to their lack of collateral, perceived high risk, or small loan sizes that don't justify the administrative cost. Microloans fill this gap. They come with less stringent requirements, making them a lifeline for small entrepreneurs. But how do these loans work in practice? Typically, a microloan is provided to help start or grow a small business. This could be a woman in a rural village purchasing a sewing machine to start a tailoring business, or a farmer buying seeds and tools to increase agricultural production. The impact is immediate and tangible. It's about giving individuals the tools to build their businesses, support their families, and in turn, uplift their communities. Now let's talk numbers. The statistics paint a vivid picture of the impact of microloans. According to a report by the Microfinance Information Exchange, the average microloan in the developing world is around $1,000. This amount might seem small in a Western context, but in a developing country, it can be transformative. The World Bank estimates that about 1.7 billion adults remain unbanked globally. But thanks to microloans, millions have been able to start small businesses, create jobs, and contribute to the economy. It's essential to understand that microloans aren't a one size fits all solution. They vary widely in terms of size, terms, and conditions based on the lender and the region. What remains consistent, though, is their focus on accessibility and empowerment. As we move through today's episode, we'll delve deeper into the real life impacts of these loans, explore the stories of those they've helped, and understand the challenges and the future of microfinancing. But first, let's take a closer look at the tangible impact microloans have on a business and economies worldwide. In this segment, we're going to explore the profound impact microloans have had on individuals, businesses, and even entire economies. The stories are as diverse as they are inspiring, and the numbers are genuinely telling of the power of small scale financing. Let's start with real life example. Consider the story of Saima, a woman from a small village in Pakistan. Saima's life changed dramatically when she received a microloan of just a few $100s. With this loan, she bought a sewing machine and started a small scale tailoring business. What started as a one woman operation quickly grew. She employed other women in her village, providing them with income and a sense of purpose. Her business didn't just affect her family, it impacted her entire community. This is not an isolated story. It's a narrative repeated in thousands of variations across the globe, from Pakistan to Peru, from Bangladesh to Botswana. The impact of microloans is also reflected in hard data. According to a study by the World Bank, access to microfinance is associated with significant improvements in household income and assets. In Bangladesh, for instance, for every dollar lent to women, household income increased by 18 cents. This number might seem modest at first glance, but it's a substantial increase for families living on the edge of poverty. Furthermore, microloans have a multiplier effect on local economies. A study published in the Journal of Economic Literature found that microloans helped increase business investments and profits. This, in turn, fuels further economic activity. When a business flourishes, it doesn't just benefit the owner, it creates jobs, increases demand for local goods, and injects more money into the local economy. Another critical aspect of the impact of microloans is on women's empowerment. Microloans disproportionately benefit women, who often face significant barriers in accessing traditional financing. The United Nations Development Program, or UNDP, notes that women, with the help of microloans, have been able to increase their participation in economic activities, gain greater control over household income and resources, and improve their overall socioeconomic status. However, the impact of microloans isn't just economic, it's also social. By empowering individuals and communities, microloans contribute to increased self esteem, community cohesion, and social capital. People are not just becoming financially independent, they are also becoming agents of change in their communities. In conclusion, the impact of microloans is profound and multifaceted. They are more than just financial transactions. They are tools of empowerment, economic growth, and social change. As we move forward in this episode, we'll delve into the various providers of microloans and the process of obtaining them. But first, let's take a moment to appreciate the ripple effect that a small loan can have on an individual's life and their community. In this segment, we'll explore the world of microloan providers and the processes involved in obtaining these life changing loans. The landscape of microfinance is diverse, with numerous organizations playing pivotal roles in extending financial services to those traditionally underserved by conventional banks. One such notable player in the field of microfinance is Kiva, a global nonprofit that allows people to lend money via the internet to low income entrepreneurs across the globe. Kiva operates with a mission to expand financial access to underserved communities, thereby helping alleviate poverty. Lenders can choose whom they lend to, whether it's a farmer in Kenya, a shopkeeper in Peru, or a fisherman in the Philippines. Another giant in the microfinance world is the Grameen Bank. Founded by Nobel laureate Muhammad Yunus, Grameen Bank's approach is unique in that it focuses largely on women borrowers and operates primarily in Bangladesh. It's a prime example of how microloans can be tailored to meet the specific needs of a region and demographic. Closer to home, we have organizations like David Allen Capital, which provide accessible and straightforward business capital. David Allen Capital, known for their swift approval process, offers various business loans, including those suitable for smaller needs, an area often neglected by larger financial institutions. Their approach is to offer fast, simple financing with minimal paperwork, focusing more on the business's health than just credit scores. This kind of flexibility and accessibility makes them a valuable resource for small businesses in need of quick funding. More about their specific offerings can be found at David Allen Capital's website. The process of obtaining a microloan typically starts with an application, which is much simpler and more accessible than traditional bank loans. The borrower needs to present a business plan or a clear idea of how they intend to use the loan. This is crucial as microloans are designed to fund income generating activities. Credit checks in microfinance are often less rigorous, focusing more on the borrower's character and business plan viability than on credit history. This is particularly important as many microloan recipients may not have a formal credit history. Once approved, borrowers receive the funds and a repayment schedule. Repayment terms for microloans are usually more flexible and tailored to the borrower's capacity to pay, with the understanding that these businesses are often in their nascent stages. It's also worth noting that many microloan providers offer more than just financial assistance. They often provide training and support to ensure that borrowers have the skills and knowledge needed to succeed. This holistic approach is a significant factor in the high repayment rates seen in the microfinance sector. Microloans, therefore, are not just about providing capital, they are about building relationships and supporting communities. They represent a collaborative approach to economic development, one where everyone involved works towards the common goal of empowering small businesses and uplifting communities. As we move to our next segment, we'll address some of the challenges and criticisms faced by the microloan sector. But as we do, let's keep in mind the countless success stories and the transformative power these small loans hold. As we continue our deep dive into the world of microloans, it's important to address the challenges and criticism this sector faces. While microloans have undeniably had an impact on many lives, they are not without their complexities and controversies. One of the main criticisms levied against microloans is the interest rates. In some cases, the interest rates for microloans can be higher than those of traditional bank loans. This is often due to the higher administrative costs associated with managing numerous small loans and the higher perceived risk of lending to individuals without collateral or a credit history. Critics argue that these high rates can sometimes lead borrowers into a debt trap, especially if the business they invest in doesn't yield the expected returns. Another challenge is the actual impact on poverty reduction. While there are success stories, some research suggests that the impact of microloans on lifting people out of poverty is not as significant as once thought. A series of studies, including one published in the American Economic Journal, found that while microloans can help some small businesses grow, they don't always lead to a significant increase in income for borrowers. This has led to a debate on the effectiveness of microloans as a tool for poverty alleviation. There's also the issue of market saturation. In some communities, the influx of numerous microfinance institutions has led to an oversupply of credit. This can result in borrowers taking multiple loans from different lenders, leading to over-indebtedness and financial stress. Additionally, the focus on repayment rates can sometimes overshadow the actual well-being of the borrowers. The pressure to maintain high repayment rates has, in some instances, led to aggressive collection practices. This raises ethical concerns about the welfare of the borrowers who are often in vulnerable financial positions. Despite these challenges, the microloan sector has been responsive. Many microfinance institutions are actively working to lower interest rates, improve transparency, and ensure that their practices are ethical and borrower friendly. Organizations are also focusing on providing non financial services like training and support to ensure that borrowers are better equipped to manage their loans and businesses. Moreover, it's crucial to acknowledge that microloans are not a one size fits all solution. They are a tool, and like any tool, their effectiveness depends on how they are used. The key is to understand the specific needs of each community and tailor microloan programs accordingly. In our next segment, we'll explore the future of microloans. We'll look at how innovation and evolving economic landscapes are shaping this sector and what this means for small businesses and entrepreneurs worldwide. But as we ponder these future trends, let's remember the essential role of microloans in providing opportunities and hope to those who might otherwise be overlooked by the traditional financial system. As we near the end of our journey through the world of microloans, let's turn our gaze to the future. The landscape of microfinancing is constantly evolving, adapting to new technologies, economic trends, and the changing needs of borrowers. The future of microloans is not just about sustaining the status quo, it's about innovation, expansion, and deeper impact. One of the most exciting developments in the microloan sector is the integration of technology. Fintech, or financial technology, is revolutionizing how microloans are administered and accessed. Digital platforms are making it easier for borrowers to apply for and receive loans, even in remote areas with limited banking infrastructure. Mobile banking, for instance, has become a game changer in countries like Kenya, where services like M-Pesa allow individuals to manage their finances directly from their mobile phones. This digital approach not only streamlines the process, but also opens up new opportunities for data analysis and credit scoring, making it easier to reach unbanked populations with tailored financial products. Another trend shaping the future of microloans is the focus on sustainability and social impact. More and more microfinance institutions are looking beyond financial returns, emphasizing social and environmental impact of their loans. This includes supporting businesses that contribute to sustainable development goals, such as clean energy, education, and healthcare. By aligning financial services with broader social objectives, microloans can play a crucial role in addressing some of the world's most pressing challenges. We're also seeing a shift towards more diversified financial services. Microfinance institutions are expanding their offerings beyond basic loans, providing services like insurance, savings accounts, and financial education. This holistic approach not only helps borrowers manage their finances more effectively, but also promotes financial inclusion and stability. Furthermore, partnerships between microfinance institutions and traditional banks are likely to increase. This partnership can leverage the strengths of both sectors, the reach and community focus of microfinance with the resources and expertise of traditional banking. Such collaborations can lead to more innovative financial products and services tailored to the needs of small scale entrepreneurs. As we look to the future, one thing is clear: the potential of microloans to drive economic and social progress is vast. The key will be in ensuring that this potential is harnessed in a way that is ethical, sustainable, and inclusive. By continuing to innovate and adapt, the microloan sector can remain a vital tool for empowerment and development. In our next and final segment, I'll wrap up our discussion on microloans. We'll recap the key points and reflect on the incredible journey of how small scale financing can make big scale impact. As we conclude this episode of AltFinance, the funding frontier, let's take a moment to reflect on the journey we've taken today. We've started by understanding what microloans are and their origins, tracing back to the pioneering work of Muhammad Yunus and Grameen Bank. We saw how these small loans can have the power to transform lives, not just in terms of financial gain, but in fostering independence, dignity, and community development. We delved into the impact of microloans, illuminated by stories like that of Saima in Pakistan, whose small tailoring business, started with a modest loan, blossomed into a community lifeline. We looked at the hard data revealing how even the smallest financial injections can significantly uplift households and local economies, especially in developing countries. Our exploration took us through the diverse landscape of microloan providers, from global organizations like Kiva to more localized ones like David Allen Capital. We uncovered the process behind obtaining these loans, highlighting their accessibility and the ethos of empowerment that underpins them. We didn't shy away from the challenges and criticisms, the high interest rates, in some cases, questions about the long term impact on poverty reduction, and concerns over market saturation and ethical lending practices. Yet we also recognize the sector's responsiveness and ongoing evolution, adapting to these challenges with innovation and a deeper focus on social impact. Looking to the future, we envisioned a world where technology and sustainability are at the forefront of microfinance, a world where digital platforms, diversified financial services, and strategic partnerships expand the reach and effectiveness of microloans, making them more inclusive and impactful than ever before. So, what's the big takeaway from today's episode? Microloans may be small in size, but their impact is anything but. They represent hope, opportunity, and a testament to the power of financial inclusion. They remind us that with the right support, even the smallest businesses can flourish and, in turn, uplift entire communities. Thank you for joining me, Jason Feimster, on this episode of Alt Finance, the Funding Frontier. I hope you found it as enlightening and inspiring as I have. As we continue to navigate the exciting world of alternative financing, Remember, sometimes the smallest step can lead to the most significant leap. Until next time, keep exploring, keep dreaming, and keep believing in the power of small scale to make a big impact.